Hi, I'm Steve Tinter, President and General Manager of Cook Brothers. If you're looking to do a smaller scale project like window replacements or roofing or siding, you have really plenty of options of how to finance your project. But what do you do if you're contemplating a little bit larger scale project? Might be several $100,000. So if you're looking at a larger scale project, there are really two avenues you can go through. You can tap the equity out of your house, or you can go with a construction loan. So the equity mechanisms include avenues such as cash out refinance or a home equity line of credit. What they're going to do is they're going to look at how much you owe on the house and then how much the house is worth in its current state. And the difference becomes your equity base that they're willing to make a loan based off of. You can also bring cash or savings in to supplement any shortcomings in the amount of equity that you have in the house if it's not enough to cover the cost of the work. But what do you do if you just bought the house, or if you don't have that mattress full of cash sitting up in your bedroom to bring to the table to pay for the project, or if the cost of the project or the estimated cost of the project exceeds the amount of equity that you have in the house? Well, that's where we look at what we call a construction loan. So the main difference with a construction loan is that the construction loan takes into account the future value of the house after the renovation is performed, so you can tap into the future equity that you'll have in the house. So they're going to look at what you owe on the house and then look at not what the house is worth as it stands, but what it's going to be worth when the project's complete. And that becomes the basis that they're willing to make the loan off of. Now, a construction loan is a two-part loan, so the first part of the loan is going to pay off the construction costs as they're incurred, and then at the end of the construction period, when the project is finished, they're basically going to pay off all those construction costs, and they're going to refinance your house so you'll have one new first mortgage. It's important to consider, if you're going to use a construction loan for your project, there are a lot more processes involved, so you need to make sure that you're working with a lender that actually can administer construction loans for renovations. Construction loans were originally a mechanism that were developed for new home construction, so a lot of companies will say they can run them for renovations, but they're really not very efficient at doing it. You also want to make sure that you're working with a builder that can handle working with a construction lender, because there's a lot more administrative processes involved, and the lender is going to have to vet the contractor to make sure that there's minimal risk to them on using that particular builder. So ultimately, which is the right avenue for you? Well, unfortunately, that's one question I can't answer, is everybody's financial situation is a little bit different. One thing that you might want to consider is that if you can lock into a long-term loan with a good interest rate based on the value of your house as it stands now, that's going to lock in that interest rate over the long term. Construction loans typically are going to charge you a little bit more interest as the construction progresses, and they're not going to lock in your final interest rate till within 30 or 60 or 90 days of completion of that project. And so if your interest rate slips during the construction period by 0.5% or 1%, that could translate into a fairly large amount of money over the course of, let's say, a 30-year mortgage. If you are considering using a construction loan for your project, please feel free to reach out to me. I'd be happy to give you a couple of references for folks who can help you out. We don't get anything from those lenders except knowing that they're going to administer those construction loans very effectively. The only thing a construction lender knows about the builder is, do they finish on time and do they finish on budget? Because when you line up a construction loan, there's going to be a set period of time for that loan that you have to finish the project within, and there's going to be a set amount of money. So that construction lender can really be a good reference for you about the integrity of that builder, and to see if they really do what they say they're going to do in the time frames they say they're going to do it, and for the budgets that they set forward.